Hi, welcome to the Market Alert for Friday, the 23rd of February 2024. So Nvidia triggers market melt up while bonds flatten on falling jobless claims. So there's no stopping the markets at the moment. Everything is awesome, right? It's not the economy, it's Nvidia stupid. So what they're implying there is that, the demand for graphics cards is the reason behind the market melt up. But as this news item says, all of the elements are in place for an economic crisis of staggering proportions. They were able to delay the US economy's day of reckoning, but they were not able to put it off indefinitely. Absolutely right. But you don't need to worry about that at the moment because it's an election year. They'll do whatever they can to keep these markets up. That's what they do. That's the if you go back and look at the historical data, election year, keep the markets on the upside. So anything, even if it's Nvidia selling a few more graphics cards, that's enough to drive the markets to the upside. Economic news today, German final GDP, and not a whole lot of other stuff. It's not worth really going through it. All we have to know is that the markets are going to continue to move to the upside. There is absolutely nothing. War hasn't stopped it, which generally it wouldn't, I have to say, because the initial onset does. As we saw 2 years ago with the invasion of Russia into Ukraine, the market sold off for a while but then rallied. But now that's even neutralised and the market continues to move higher. There's nothing wrong with the economy. There's nothing wrong with interest rates. There's no inflation. It's completely disconnected from reality. One day there will be a day of reckoning. I have no doubts about that, but it's not going to be any time soon. They've done this now for 14, 15 years, and they can continue to do it because they have the infrastructure in order to do it. It's just called a printing press, and if they need to print, they will print. As been shown, the interest rates have gone up, the interest payments on the debt have gone up, but it hasn't impacted yet, so it can continue. It's obviously the case, as we can see. Okay, let's have a look at this melt up from yesterday, and we'll kick off with the Dow. So, new all-time highs once more. The market went through the 38,929. You can see, as I mentioned before, yes, we had bad CPI data. Guess what happens? The market goes up. What does it do? It makes new all-time highs, 39,153. We're getting closer and closer to the 40,000. It's only 847 points off. That's nothing. Let's just have a look and see what the market put on yesterday in yesterday's bar. Let's just have a quick look. We did yesterday 534, so getting to 40,000 is a piece of cake. I've spoken about this for weeks. It's a big psychological number. We may get a pullback when we get to that level in the Dow. It's historic. But like I say, 800 points is neither here nor there for the Dow. So expect more of this on the upside. Overnight, the market hasn't got through the previous high. You'll always get a bit of a pullback, and then it will attempt the run back to the upside once more. Again, even yesterday we saw the market open, it pulled back, and then off it went. I mean, to think that they've dined out on Nvidia's earnings this week just to keep the market moving up just goes to show what they're capable of doing. Let's have a look at the DAX. German DAX through the all-time high of 17,224, now 17,447. 18,000 is the upside target, the next psychological level. Easy to do. Again, let's just have a look, see how many points it piled on yesterday. We're now getting into that euphoric stage, aren't we? Let me just redo that because I think that was incorrect. Let me just grab that. Yeah, so nearly 300 points yesterday on the DAX as well. So again, nothing stopping this at the moment. 18,000 is the upside target. The market took off in the pre-market session yesterday morning and then continued and then onto the electronic session during the evening as well with the Dow. S&P 500, guess what? New all-time high, 5,094. Leaving behind the 5,048. So you can see there again, CPI. What's CPI? Doesn't matter about it. Move the market up. Look at the red bars. Shakeout. What's it followed by? Green bars. Market continues to make all-time highs. 30-minute chart. One way. All the way. UK sideways to higher after the sell-off during Tuesday's. No, that's Wednesday. Thursday, the market up. 5-bar moving average offering a bit of resistance there. But no doubt if the Dow continues to make all-time highs today, that will be dragged with it. Now, there's the sell-off at the start. Get rid of the cash sales that people want to get out of and then bring the market back with derivatives. Classic pattern these days. US dollar sold off sharply yesterday, so we would expect the metals markets to have spiked to the upside. But guess what? Not a cat in L's. Did they move to the upside yesterday? So let's have a look and see what happened in the metals. So yesterday the market spiked up in the intraday, but then sold back to the 20 bar moving average. The market's taken this out now, and again I'll keep saying it, we're going down to $20, and that will happen when the markets start to collapse, because the first thing to get crushed is the silver price. Go back and look at any event where it's involved the stock market moving to the downside quite sharply. You will see that the silver price gets hammered, because they then cite the industrial aspect of it, saying, "Oh, the economy is bad. There's going to be less demand," so they just hammer it down. That's why they do it. 30-minute charts. There you can see yesterday LBMA market down on the overnight as well, below the low. I might come back and test that, but expect further downside today. If the drop down in the dollar couldn't spike it up yesterday, the short side is the best side in all the metals at the moment. Gold included, coming back below the averages there as well. We can see that we went down to 89 before, so from here up to yesterday's high would be the downside targets for gold as well. Central banks continue to accumulate gold by the ton. Best thing to do is to sell the paper into the market, reduce the spot, and then buy it cheaply. And you can see yesterday again the down move, and also here as well, trying to get back above yesterday's low for gold. Quick look at the gold silver ratio, and surprise we're heading back to the 92 level. We piled it on yesterday despite the fact that the dollar moved lower, so it won't be long before we're through 92 and heading back into the highs around the 100 level. Let's have a look at yesterday's trades before we conclude. So during yesterday, the market was already making new all-time highs in the pre-market session. As you could see there, it just drove to the upside and then continued when the cash market opened. Despite the fact that we had all of the flash news yesterday, the market just trading, wanted to get in the market up to the highs, which it did. And then it was brought back on some poor flash news. Then the market traded back up after the flash news was out of the way, and then all the way up to the R3. The R3, 90% of the time the market will stop and reverse, which it did there, but then all it needs to do is to drive through, and then the market will continue. And all you need is an Nvidia announcement and the Dow futures to move higher, the S&P to move higher, and the market moves higher. We did have a pullback with a short here, market moving lower, and then as it started to come back, it's the wrong side to be on at the moment. As the market came back, you can see I took the profits off the table, and it was a wise decision as well, because shortly after this the market did move down another 15-20 points. However, it started to make its way back once more to where I'd already got out of the trade anyway, so just a few more on there. Could have actually left it a bit longer, but I always say the best part of a sandwich is the filling. You never get the top, you never get the bottom, but it's a matter of taking the money out of the middle. Let's have a look overnight, see what's happening. 2-minute chart is, guess what? It's moving to the upside. Let's have a look, see where yesterday's high is. It's only a matter of 25 points away from where we're currently trading. So again, expect the high to be taken out, even if it's just a rally through it on the open. And if we don't get the rally, then we'll get the cash sales. The market will consolidate, and then it'll make its way back before the end of the day, because that's what they're doing. No doubt they'll probably drag out some other further news to do with Nvidia. They've not had any economic news really to move the market. It's only been the Nvidia company putting on, I think it was 25 billion or something in sales. I mean, it's massive. No denying that, but to move the whole of the markets globally on one company's profits is interesting, to say the least. Okay, that's it for this one. I'll get this uploaded to you. Enjoy your weekend, and as ever, thanks for watching. See you in the next one.